So President Trump is now calling for a fourth round of quantitative easing. Many people find this to be an odd proposal, considering that the president maintains that this is the strongest economy ever, that we're about to reach all-time highs in the stock market again. This has been the best start for the year for the stock market in I don't know how many years, but it's been extremely good. We've had a massive run-up in the price of stocks since the Christmas Eve lows. Yet the president essentially wants the Fed to print money to prop up the price of stocks. Now, one of these things can't be true. Either the Fed needs to prop up the price of stocks, or we have the strongest economy ever. Now, I think the president is probably figuring out that we don't have the strongest economy ever, so that's why he wants the Fed to prop up the price of stocks. Unfortunately for the president, after he got into office and we had that big stock rally that was based on speculative mania, he took ownership of the existing stock market bubble that has been, reinflated since the lows of March 2009, and he essentially put his big Trump stamp right on the S&P. So because Trump has taken credit for the current levels of stock prices, which are way overinflated and massively distorted, if there's any decline in stock prices, that then will now come back on him. In my opinion, this was a huge strategic blunder, because with stocks already being relatively high when the president came into office, the odds that they would go up during his term more than they go down were pretty slim as far as I was concerned. And it seems now, with the election still about a year and a half away, the president is now more on my side in that respect. He seems to see that there's a much greater chance over the next year and a half before the election for stocks to go down more than they go up. So the president wants Fed Chairman Jay Powell to blow with all his might as much air as possible into this market. And to ensure that this happens, the president is now nominating two political allies of his, Stephen Moore and Herman Cain, to sit on the Fed Board of Governors. Now, while these two guys historically have been, big inflation hawks and people who didn't want, say the first three rounds of quantitative easing, they were strongly opposed to. But now that we have a Republican president, I think that they are, Stephen Moore is already quite amenable to that position. He's already turned into an easy money guy. And Herman Cain, despite just publishing an op-ed in the Wall Street Journal saying we need a dollar as good as gold, he's not exactly going to be a hard money guy if confirmed, or else Trump wouldn't have nominated him. Trump is not nominating hard money guys to the Fed because that's not what he needs right now. Politically, Trump just needs to get by until after the 2020 election, and if we have a big crash after that, well, then that's okay, because then he'll have 4 years to try and put the pieces back together, and he won't have to run for re-election after that anyway. And now the pearl clutchers and the financial media are wringing their hands over Trump appointing political allies like Stephen Moore and Herman Cain to the Fed, because they say, the Fed's supposed to be independent, so the president should appoint independent experts to run the Fed, which of course is complete nonsense. The Fed's never been independent. It is a political tool. It always has been. The president always leans on the Fed when they want the Fed to prop up the economy. I mean, politics is the reason why we have a Federal Reserve. It's impossible for a political institution like the Fed to be politically independent. I mean, especially since Greenspan took over back in '87, it's been very clear that the Fed is there, essentially, to print as much money as the President of the United States needs at any given time. The last Fed chairman who acted at all independent was Paul Volcker before Greenspan, and he essentially told Reagan that he wasn't going to print him any money to pay his deficits and try and monetize his deficits. So what ended up happening was Reagan had to run up a huge deficit, and then interest rates went up because he crowded out private investment. And so in order to attract the necessary amount of money to cover the deficit, they were paying 20% interest rates. Greenspan came in and he kicked off the Great Moderation by lowering interest rates and essentially paying down keeping rates low for every president after that, so that Bush and Obama and now Trump could run massive deficits every year with no fear of reprisal. But hopefully Trump's actions over the next year and a half will once and for all shatter the Fed independence myth. Now, another risk of QE4, other than just blowing the stock market bubble bigger, is that it may cause general price inflation, meaning that the game of QE, the scam that it essentially perpetrated, was it really bumped a bunch of money into the economy and inflated the price of assets without significantly inflating the price of everything else in the economy. So what that meant is that if you own stocks, as rich folks are wont to do, your net worth increased dramatically. But if you were a wage worker, your pay didn't really go up at all. But that didn't matter quite as much because it still overall gave people the impression that the economy is strong and doing well, and people felt comfortable investing and borrowing a lot of money and spending things, and essentially blowing up a general credit bubble. But who knows, the last time on QE, this may actually break into the real economy if it's not done well. You do get into dangerous territory when you start just printing money to try and prop up the economy. But personally, I don't think that the inflation will come until after any potential crash, which is part of the reason why we've been able to blow this bubble so big, because the inflation risk, while severe, will not manifest, in my opinion, until after there's a crash, and that's because the dollar will keeps maintaining its value because we keep creating debt, which essentially is an asset denominated in dollars, but that debt must be serviced. So as long as people throughout the world are in debt denominated in dollars, which, not just the U.S. government and people in the U.S., but are people around the world, have loans and bonds denominated in dollars, as long as that debt must be serviced, people are going to have to work to earn dollars to pay down those debts. So as long as the debt burden grows with the money supply, the demand for actual dollars will keep rising. The only time that there will suddenly be a glut of dollars is if for some reason that debt burden collapses for some reason. If, let's say everybody goes bust at once and you have all this debt collapse, well, then all of a sudden people don't need all those dollars to service their debt. So to close, it's a positive thing that President Trump is starting to wise up to the real state of the economy, and that's that the economy is very weak. I don't know if this last ploy on his part is going to be good enough to help the economy limp along through the 2020 election, but this is his best bet at this point. If he can go all in on a strategy of QE4, which I think is a mistake economically, but politically is probably his best hope. With stocks so high and unemployment so low, there's a huge downside risk in the economy right now, but the president doesn't need to keep the economy growing necessarily, because a decline is the worst possible outcome. So as long as he can sort of put the economy in formaldehyde and keep it in stasis, even if we're having less than 1% growth every quarter, as long as it's positive and not negative, he should still have a chance in 2020. Essentially, what he's trying to do is he's trying to zombify this economy the same way that Japan's economy has been zombified. The Japanese have essentially had no growth since the end of the Cold War, and they've completely stagnated, but they haven't had a real serious deep depression. And that's because their central bank has just continually pumped in round after round of QE to keep the economy's pulse active. If you gained anything of value from this video, I'd appreciate you clicking that like button and subscribing, and don't forget to hit the bell because I do upload every day, and I hope to see you all back here tomorrow.